I'm joined on the stage by four individuals that we're going to talk a bit about the benchmarking aspect of innovation and how you look at innovation, the success of innovation. So I'm joined by Yasir Alberhana, Alan Kwan, Rob Shimmick, and Claudia van der Salm. So, and just a little bit more, Yasir is a group CEO of Trust Re. Alan is the head of customer and distribution management for North America for Swiss Re. And Rob is the group CEO of Bolt Tech. And Claudia is the strategy partner at Google DeepMind. So a lot of insight to many different areas, I'm sure. So maybe if we could start, I'll let each of you kind of explain a little bit more what your roles and what you do and how you help to instill innovation in your organization and what the projects that you work on. Yasir, you want to start?
Sure, thank you very much. My name is Yasser Al-Baharnas. I'm the CEO of Trust Re. I've been in reinsurance almost 37 years in my life. Trust Re is a regional reinsurer based in Bahrain, and it's operating through both Afro-Asia, basically the Middle East, Sub-Saharan Africa, as well as Southeast Asia. We're a classical reinsurer. We do about 85% non-life and about 15% life reinsurance. In addition to my role, I have also other hats. I am in the board of the FAIR, which is the Federation of Afro-Asian Insurance and Reinsurers, and also the Association of Insurance and Reinsurers in Developing Country. The former is based in Cairo. The latter is based in Manila. I'm also in the board of the Chartered Insurance Institute, as well as a local institute, which is the BIBF in Bahrain. As I said, it's basically reinsurance. So innovation always reinsurance derives from insurance. So insurance companies have to innovate first, then it's a matter of packaging and facilitating data transfer. A lot has been said, so I don't want to repeat what was said in the earlier sessions, but I guess it's just drawing the distinction to me is the product versus the process innovation. This is very important. A lot label innovation, and I see a lot of basically digital transformation. They call it innovation or technology innovation, and we see this. As far as the MENA is concerned, I believe we are starting and we have started this process, but there are a lot of challenges, a lot of obstacles, which I'm sure you will go through later on. So,
Thank you. So I'm the head of customer and distribution management for North America for Swiss Re Corporate Solutions, our commercial insurance side. A little bit about my background is I graduated college in San Francisco during the tech bubble burst, and there were no jobs. So my classmate was like, why don't you just come and work in our insurance company until you find what you want to do. So I started, and my first day of work, paperwork was up to here. They had not been sending out policies for months. And so I remember my first week coming home and like all the paper cuts, issuing policies. And my first job was to fill the fax machine before I left at night, to pick up the faxes in the morning, and to issue endorsements and policies and send them all out. Then from there, became an underwriter, moved through cyber, D&O, property, global property, all the different segments. And when I came to Swiss Re, role opened up to manage brokers and customers and really bring them the needs-based solutions. So when it comes to what my role is innovation is to look at our customer needs on one side, really understand what is it they need, what is it that's responsive to what they want in a very sustainable way, right? So we can all create a one-year policy that will meet the need, but for us, it's sort of the longer game. And on the other end of it, managing our distribution partners is talking to them and trying to figure out what our end game is. And for all of us, it's efficiency, right? It's efficiency all the way through, and it's hearing what needs are, it's paying claims, but doing that in a way that's sensible, reasonable, and moving forward. So My role in innovation is really, because I started by issuing policies, understanding the full value chain and making sure that we're able to live up to it and deliver it.
Hi, everyone. I'm Rob Shimmick, and I am the Group CEO of Boltec. So for those of you who don't know Boltec, we are today the world's most internationally scaled insurtech. We operate in North America, Europe, Asia, and Africa across 38 countries, but we're a baby. We are just 4.5 years old, and we were born really from understanding the problem. So many of you would know that I spent 12 years at AIG. I loved my time at AIG, loved the people at AIG, but definitely it was challenging to move a big ship in the right direction at the right speed. And so I think when you want to get your head around what it is that we do at Boltec, we focus on insurance distribution. And our insurance distribution is in a embedded insurance space. We are B2B2C. You will rarely know our company, but you will always know the partners that we will operate with, and we're super proud of that. We do not take pride in everyone knowing the Boltec name. We take pride in the business partners that we work with, in many cases, some of you in today's audience, helping those companies to be able to achieve their objectives with their customers. And so the way we think about what we try to do is we try to provide tailored, affordable, accessible, and convenient embedded insurance solutions on a B2B2C basis, working through our partners' distribution channel. And so we love working with, for example, the telcos around the world, or the OEMs, Apple and Samsung. These are examples of the players that we would use to get to millions of customers. So when you want to think about doing innovation, if you really want to make a difference, you want to do it at scale. We want to do it at scale, so we work with the kind of distribution partners who can get to customers en masse around the world. And we like to think of ourselves as being sort of a connective tissue that connects insurance carriers who take the risk with distribution partners who maybe in many cases have never sold an insurance product before in their life. And our technology and our capability can enable anyone to be able to provide an insurance or protection solution to their end customer, even if they don't understand all of the expertise that it takes to manage the regulatory risk, the technology associated with it, or even just understanding the risk enough itself. That's what the insurers do, that we can connect into our distribution partners. So that's basically the role that we play. I think if I just said, what do we do the most about innovation? The main thing I would say is we're big believers in not being the big disruptor in the world. We want to be the big enabler in the world. And so we will succeed if we help the others around the industry who are trying to achieve fundamentally the same thing, do it faster. And so we are a small company that can move at pace. And when you connect a small company that can move at pace with a big company that has expertise, that has data, that has talent, that has experience, that has customers, then we can do many more things quickly and we can achieve even greater results. And so I love many of the comments that were made earlier about the protection gap and how do we close it. And my single biggest comment to everyone is none of us will close it by ourselves. I went to the University of Pennsylvania also, and our slogan in my graduating class was, you've got to cooperate to graduate. So we either do this together or it won't get done. And I want to die of old age. I just don't want to die of old age trying to build this business. So we'll never do it all by ourselves. We should do it together.
Great. I'm Claudia van der Salm. I work as a strategy partner currently at Google DeepMind. Google DeepMind is a unit in Google that builds AI responsibly to benefit humanity. I think it's quite aligned with our ambition in insurance, hopefully. Google, there's a healthy disregard for the impossible. I know Waymo was mentioned a few times, so the ambitions are high. I also have a background in InsurTech. I sit on boards of InsurTech companies. But before that, I actually worked as an executive in the insurance industry across Europe, US, and Asia. So very happy to be here.
Thank you. Well, AM Best 8 years ago looked at innovation, and we started thinking about the importance of it, given all the changes and the amount of data and the speed at which things are changing. So we started looking at it, and one of the things we did, went out and talked to the industry, and surprisingly, some of the industry pushback was, we've been around for 150, 200 years. Why do you need to care about innovation? We're fine. Just continue to rate us the way you rate us. Well, that kind of dawned on me in the fact that, our rating really is looking at your innovation, but it's looking backwards at your innovation and what you've done over time. And what we're trying to do is to get out in front of it. And the point to these companies then was like, wait a second, you've been writing for 200 years, you're still here, you've been innovative, or you would not be here. You didn't write auto insurance 200 years ago, and you weren't marketing on the internet 50 years ago, or maybe you might at this point, I don't know, it's been a long time. But that was the general point, is people didn't really think of innovation and look forward at it 10 years ago, 20 years ago. It was more, you were just doing things that made sense to continue to be able to service your customer, to provide the right policies, to market it the right way. I mean, I don't know how, no matter how good you are, you won't be able to provide going forward. So, we have our score, and we have a criteria out there about assessing and scoring innovation. We do it for our purposes and what we're trying to do. But maybe for the panelists, is when you look at ideas and you're judging ideas and how it works, all boards are always kind of looking at, how do you quantify that? How do you quantify success? How do you quantify the ideas that are generated and look at it from that perspective of, are they a success or not? And maybe it's not quantified, but how do you determine if something's a success? Why don't we, Claudia, you want to start with this one?
Yeah, I think in technology, of course, you have workplace applications. Usually it's being looked at, the metric is adoption. I think it's not a great metric, but, and then for other more specific applications, where you're fulfilling a specific task, you basically look at what you want to achieve and you work backwards from there. So are we implementing this technology because we want to accelerate writing business, or are we implementing this technology to increase sales, to increase operational efficiency, and then we work the metric back from here.
Right.
So there is no easy answer to what exact thing you measure. I'll share with you the way we measure ourselves at Boltec. We measure ourselves first by how many distribution partners do we have. So how many of you out there want to work with a player like us who can actually help to bring a solution to your customers? And so one thing we're always looking at is, how many distribution partners do we have? Then how many active users are using the platform that we have? We measure how many insurance quotes we provide. Just to give you an idea, we are a true baby, 4.5 years old. We quote $140 million of insurance, US dollars worth of insurance every day. So that's what a baby could do. None of it's because of us by ourselves. It's because of who our partners are. In the United States, you would know Progressive, but you would never know Boltec. You would know USAA, you would know Farmers Insurance, but you wouldn't know Boltec. And so for us, it's much more about measuring how many partners can we get to. Maybe the most interesting thing is how many competitors who would traditionally consider themselves to be competitors against one another day to day, do we actually get as our partners side by side, using the same basic technology to accelerate their own very unique ideas and their very own unique capabilities, but they accelerate the pace to market. And so I think ultimately, if we could come up with the perfect way, I'd want to measure how fast can we get things out to market and in what kind of scale.
Alan?
Thank you. I think when I look at innovation, I look at two different parts of it. So I'll start with the product offering. when we started 15 years ago, starting to market our parametric offering, right? We didn't invent it, but what we did was we linked it to climate risk, and we linked it to secondary perils, and we linked it to what people thought were uninsurable in their supply chain or in different ways, right? Then Thailand flood came and people realized that there's no hard drives. And so for us, when I look at innovation on the product side, we took something, we applied our data, we looked at what the customer needs were, and we created products that really responded to what our clients wanted, right? Where our clients found gaps in their current coverage, our clients couldn't find policies off the shelf, we were able to bring them bespoke policies. And from there, other clients heard about it. And we started to get joint movement around, hey, you've got climate risk, or you've got supply chain risk, or you've got CBI issues, right? So when I was underwriting, we gave CBI away. It was, CBI is contingent business interruption. So your contract manufacturers, places where you don't really understand where your monitors are being made, right? All the parts come together. But we were bringing bigger solutions when the industry was constraining risk. So I think that's one end when I look at the innovation side when it comes to product is we've been able to get to scale something that we created for one client. When I think about the technology side, there are lots of different ways to cut numbers, right? And we all have our own, common themes I've heard today are silos, regulatory around data, management of data, structuring. And for us, we created all of our own models. And if you guys have never looked at a flood map before and how flood map, you basically, it's the most ridiculous thing in the world, because if you want to find out what a flood zone something was 10 years ago, you basically held up a FEMA map and then an Atlas map, and you tried to see, is that the parking lot? Is that the building? What is it? And so one thing that we did was we had a ton of scientists come together and we built a digital map. Then we offered that out. So I'm not sure if any of you guys have ever used CatNet before, but it basically became the easiest way to put a location in and figure out where the peril was, right? What the flood zone was. And from there, we continued to build things off of it. And when our clients came to us, they were like, wait, you can tell us where the flood exposure is, but you know what the loss exposure is. How do we start to get that? And we started to build tools and give them access to things that we use every day. And our clients started to love it because we're in a time right now when innovation and technology is all coming together and people are really understanding the risk, right? So you may not be an actuary by trade, but you play one on TV. And so people come in and they're able to start to ask their insurers exactly what they want. And the insurers are able to respond to that. So like when it comes to technology innovation, we've been able to bring that to them. And it's so counterintuitive as to why you would give your tools to your clients, right? Because that's your competitive advantage. But at the end of the day, what you realize is if we all speak the same language, if we all understand what the loss expectancy is commonly, then we start to address those problems and start to close the gap.
I don't think this is a binary answer. I mean, as a reinsurer, you can't call yourself, well, I am an innovative reinsurer and I'm not an innovative reinsurer. This doesn't go today. This is part and parcel of the offering that all insurance companies and reinsurance companies have to advocate today. You have no choice. If you do not innovate, if you don't stay up the path, you will find yourself marginalized in the markets that you operate. The role of technology and the way you've asked, Matt, is how do you benchmark it? How do you know what are the success factors? Very difficult answer. It is like about 10 to 20 years ago, everybody was talking about a return on human capital. How do you measure it? Very difficult. Is R&D part of it? It is not. It's a very long-term investment. All I can say, our role as a reinsurer is an enabler to ensure that the technology and the adaptation and the innovation is there. But I go back. If it's a process, yes, we have KPIs on claims processing. What is your slack time? How responsive are you? On underwriting, it is all these tools that help us better to understand, price, model these risks, flood, property, and and the like. So process is not an issue. Now you go to products. I defy anybody. Insurance products are mature. The standard policy for fire, marine cargo, marine hull, aviation has been there for years and years. There is little you can innovate on these classical insurance products. What we see is new classes of business, like cyber. So to me, this is where the innovation comes in, which is in response to the growing demand. Cyber was there 20 years ago, nobody cared about it. Now everybody is looking at it. So I think we have a dichotomy here. We have mature products, and the issue is what do you do with them? And we have developing products. The same thing on the process. But long answer is difficult. And I think we just have to consider this as a sunk cost. Sooner or later, all these efforts will reward themselves. You have to innovate, be innovative, and you have to make sure that whatever you do, you reach the clients. If not, somebody else will take this business.
Yeah, I mean, what I'm hearing is the measurement kind of varies with what you're doing. And I completely agree with your comment of, it's just a matter of constant improvement. You've got to find a better way to service, better product. Cyber is the example. It just kind of, it happens and things go. And that was kind of back to the point I made earlier about companies thinking, well, what do you care about innovation? It's like, we don't really worry about that. You don't worry about it, but you're doing it. You have to be doing it. I think it's a great point. Maybe too, I think it was asked in one of the other questions. Hopefully you guys have better thoughts on it, but success stories. Alan, do you want to start? Maybe what are some an example of where you saw some real success, and why was it successful? Was it because of the demand? Was it because of the innovative thought that came out that forced it? What leads to a success more?
I think when I think about recent success, and I'll stick to technology because that's what we've been talking about, is I talked a little bit about our risk and data services platform. And what's interesting is it started out as, actually Andrea saying, we're going to give our model away. And what happens, I'm sure this is what happened when the first laser printer came in. And people are like, we're getting rid of our typewriters, right? And people are like, what do you mean you're getting rid of our typewriters? What do you mean you're giving away our model? And what we did was we created a completely private model, a private enclave where our clients could load all their risk in. And they could start to see for themselves and start to figure out how much insurance would cost. But it wasn't just that. It was more than that. They could connect in different parts of their database, and in real time, they could start to look at their climate risk. So if you are the example I like to use is if you are like a supply depot, right? And we all learned this during COVID, toilet paper. If you have warehousing and you know that 30 years from now, this warehouse is gonna be underwater. If you make toilet paper and your toilet paper plant is gonna be underwater in 30 years, you have to start to think about capital expenditures and all those other things. But we started to give them digital tools in a very, very simple way to start to look at things like their supply chain and how far back you can go. And these are, on one end, like very simple concepts, and we all have Excel spreadsheets that do this, but your Excel spreadsheets are only as good as the last time you opened and updated them, right? And for most people, that's a year ago. And then you open it a couple months before renewal, if you're lucky. And then people miss up accruals and all these other things. But if you had a live platform built for the purpose of managing your assets and connecting in all these different models and tools in a real-time basis and could see nat cat risk coming, we've all been doing this for a long time, right? It started on a piece of paper, it started in Excel, and then we've all built our own tools for it. But giving people a digital way to do it, it's not disruptive, it's just evolving their thinking. And it involved our internal thinking, it evolved our client thinking and our partner thinking to all get to the point. And at the end of the day, if we all speak a common language, to me, that starts to become the success story, because we go beyond okay, this is what we've done this year, to you can really see a change in our loss expectancy. You can see we have a 30-year plan to make sure that our assets are protected from climate risk. Like, it is actionable, it's super clear, and if we're all talking like commonly, we get it.
Rob, you?
So I think the two things that for me are concrete examples of the measure of success. The first one I mentioned a moment ago, and that is that when we work with competitors or companies that we traditionally consider themselves to be competitors. So in America, we work with Progressive and with Geico. They're both terrific. With Progressive, we help them enable the ability to do the auto and home bundle. So when Flo's offering you the auto and home bundle, a piece of that capability is coming courtesy of the Boltec technology. Well, we work with Geico in a very different way. But when you can work with these two big competitors and have it be a symbiotic relationship where they understand that there's a spot where we can just help them do something that they're trying to do faster and do it better, that's really good. In Europe, for example, we are partners with Allianz, Zurich, AXA, and Generali. And when I say we are partners, we run effectively an insurance exchange. Think of it like a stock exchange, except for on personal lines insurance, we're helping to make accessible personal lines insurance at the exact moment that a customer is looking for it. But with each of those different players, in their own very unique way, they are not using us in exactly the same way. And much of what they do is quite proprietary to their organization. But it gets back to this sort of democratization or the sharing. If you're going to do everything yourself, every one of us does everything ourselves, we will never make a dent in this problem. If we recognize that there are certain places where we can all share, then we can make this all happen in a much faster way. So one concrete example is when we work with competitors and they don't see it as being a problem to work with the competitors. And I guess the best evidence of that is some of those competitors have invested in us. So they have provided capital to this company, even though they compete against one another on the playing field on a regular basis. And if I had it my way, I'd say everyone should invest in it. Let it be completely democratized so that no one has a question whether we're helping one more than the other. I'd like to help it all. And we're not the only solution. We work with many others who help make us better so that we can make the people that we work with better. So to me, that's one. The other example, I mentioned that we love telcos. There's something like 7 billion smartphones operating in the world today. That is the way that some people, it's the only way that some people can do their transactions, that they can communicate with the world. And one of the main superpowers we have is helping to make sure that if anything happens with that, within hours, we can get you right back up and going. And we generally try to keep that out of the insurance space and make it more of a warranty, where meaning our answer if you have a problem is, yes, we'll take care of it. Because nobody wants to hear at that crappy moment a no. They just want, I have a problem, this is my only way of doing transactions, this is my only way of communicating with my family, this is my only way of living my life. I just need it solved. And so our main superpower is the ability to do that, but that's only the starting point of what we do, because our real goal is to help a telco, for example, not just protect the device, but to provide other solutions to their customers that maybe it would take them years to be able to get access to, or maybe they'd never see access to, but it's being offered through a party that they already trust and who they're already comfortable with. So those are the two best examples I can say of success.
Claudia?
Yes, I'm working at the heart of AI development and research. I can draw many examples, but I'll pull out a recent one that maybe you have seen in the news, which is AlphaFold. AlphaFold is an AI system that predicts protein folding, and some of my colleagues at DeepMind, they were awarded the Nobel Prize for Chemistry for this several weeks ago. So if we take a step back and we look at what were the foundations of this success, it's really interdisciplinary thinking and teams. So the teams that works on this success, they had biologists, physicists, chemists, machine learning, scientists, and also engineers, and of course, down the road, product managers. So the truly interdisciplinary thinking is a big foundation to this success. And what does it take to make this effective? I think it takes a level of humbleness and vulnerability in the team to learn from each other. Because only by understanding each other's disciplines enough can you really have the groundbreaking success. So being vulnerable, open to learning, really work together and have the shared goal. I think these are the drivers for the success. I think we can translate this to the insurance industry. If we reflect on our industry, I think there are many areas where we have different disciplines together. And at this intersection of the two disciplines or two or more disciplines, I think we can have the most impact.
Just a reminder, I know we've had it in the other sessions, but we have microphones on each end. If anybody has any questions from the audience, they want to just go to the microphone, we'll go there. And also you can submit questions through the app. So, Claudia, you brought up AI. I think it's something that everybody's looking at, but and just for each of the panelists, do you think AI is going to be have a material impact on the insurance industry and the way the insurance industry works or does its work in, say, the next 5 years? And if not, why not? What do you think would slow it down?
It would be funny if I said no. Right?
It would be. But.
Yes, I think there are many AI technologies. And one of the reasons that I changed from being an insurance executive to moving into the AI development is that I think these AI technologies will have a material impact, and they will affect every part of the value chain, whether it's just operational efficiency, whether it's making better decisions with better data. I think everyone will need to take a step back, look at their value chain, and see where could technology make this better decision-making, better operational efficiency, better customer experience. I think in insurance, we may see the effects first in customer experience, in underwriting, in compliance and risk.
Okay. Rob?
I agree 100% that it will impact all elements of the value chain, everything from selling to understanding the risk, to underwriting the risk, to servicing the policy, to the claim. So there's no question that I think it will impact all aspects of that. I think that the best advice that anyone could really get in this space is to really understand the problem. Because if you understand the problem, then you'll be able to find the solution. There's a great quote that is attributed usually to Albert Einstein, but he's not the only one who would say, if I had 24 hours to save the world, I'd spend 23 and a half hours trying to understand the problem, and then about half an hour on the solution. And I think that that's what's super, super important here, because I'm sure, like all of you, I'm inundated with the number of AI solutions that are out there. And usually, I ignore them. I spend all of my time trying to figure out what are we trying to do with AI. And then I'm sure that I can go out and find the proper solution for it. So if you're an AI person, I'm sorry that I ignore your emails, but that's the reason. That's the reason why.
Alan?
Just to be the insurance nerd here, but there's also like the risk of AI and what's covered in intellectual property. And what gets ingested in, once it's in a model, does it live there forever? And these are a lot of questions because IP coverage is a very specific coverage. It's one of those that barely exists coverage for it. But those were the first lawsuits when the LLMs came out, were about how did you learn English, right? Like, where did it come from? And they were ingesting the New York Times and kind of all these other things. And the New York Times, like, wait a minute, you can't just take it in. So I think, there's a risk of it, which I think is going to become moved to the forefront very, very quickly when people start to realize sort of how AI works and what it does, on top of what AI is going to do to change our lives and how it's going to be, put in there. I think the other part about AI and I'm actually really glad Andreas brought this up, is diversity, right? So, if you look around the room and you look at, we have systemic problems in healthcare analysis, we have systemic problems in a lot of other things, is because there's not enough diverse data in a lot of the algorithms and how this stuff is built. So we really need to make sure that we take a larger view about what's in it before we start to fully rely on it and start to build more products on it and start to ask other questions, and making sure that it really represents a lot of different people in a lot of different places to get us there.
Sure.
To answer your question, will it have a material effect? Yes. Next 5 years, yes, but probably even longer than this. Keep in mind, AI is nothing new. Yes, the applications have now flourished, but AI goes long time ago. If you look at it, AI started, and its primary application has been in robotics, especially industrial robotics. And that is one parallel, and that's a field. There is no way that today humans can do that job. So this is an effective application which started a long time ago, and we see the process right now. So AI will definitely be a changer and in a lot of our business, be it insurance, banking, and so forth. So we will be the recipient for a lot of this. Yes, it will help us to do claims better, as Rob said, to underwriting better, to modeling, etc. But keep in mind, AI, though they call it now adaptive, AI was created by humans. It just has a faster ability to learn and to have more a cognitive learning process. Humans don't have that capability. If it's conditioned, they will, but this is a long shot. So, let's take things in stages. We should embrace it. We should be able to adapt it to our needs and requirements as insurance and reinsurance companies. But I don't expect AI to do everything A to Z. I also don't expect that humans will be displaced. The skills and the applications will likely gravitate towards monotonous, for example, image recognitions for claims, or looking at all these reinsurance policies to spot out, clause 7.6, the London Institute exclusion clause, what is missing, what is not. This is very good for us. It will help us to concentrate and do other, more effective tasks and leave the rudimentary ones to AI. And probably in the process, we will learn more, etc. So I guess you'll find this in each and every conference. AI is there. We should embrace it, but we shouldn't fear it. We should not fear it.
Well, you bring up the issue within AI, the underlying assumptions. I know for us, our regulators are always questioning that and are always concerned about the bias in the underlying assumptions. So, thinking in terms of regulators, just not just AI, but innovation in general. Do you see regulators as a hurdle? Or are they working, to be help to support the idea of innovation? How do you see regulators fitting into the whole idea of innovation?
I think this question also propped up in the previous session. Regulators have to be proactive in this, and they have to understand, but they cannot expect miracles from insurance companies. It is not an issue that is easily dealt with. They should be a facilitator, and they should not block a lot of this. At the end, if you are able to deliver to your shareholders better return, if you are able to do your processes in a more efficient manner, reduce cost, if you are able to reach clients. So I believe they should have an open attitude there. I haven't seen, at least in the MENA region, regulators who have enacted laws or regulations. I know in the DIFC, for example, the Dubai International Financial Center, there is an insurance incubator, and they try to put together and advance this. But I haven't seen parallels over there, but I guess it's a part of the development. Don't forget, we have an issue which you don't have here is North America and as well as Europe. The insurance penetration is very low. I'm talking about almost 1.6%. The normal or the average in developing countries are 8. So this is why AI is today, to me, is just reaching for the mass. And this is where we see the innovation. More and more effective ways to reach and to increase the awareness so that we can get the scale. And this is, I believe, the role, to answer you, of the regulators. If AI is going to help us in this, so be it.
Okay. Anybody else want to comment on the regulator question?
I'll just say there's two sides to the equation, and everyone understands that. The regulator's job is generally to provide protection. And so by definition, they have to be the guardrails. And one of the things that the guardrails will typically do is make sure that you go slower and make sure that you stay on the road. On the previous panel, I really loved the answer that was given there, which is, but the regulators can also, or governments can also, provide incentives that steer things into a particular way. I mean, think about the tax law in America. Every time it changes, to provide an incentive for a deduction for interest on real estate or for charitable contributions, whatever it is, it incentivizes a set of behaviors. And so there are opportunities for them to use their capabilities to incentivize behaviors, but just recognize that they're going to face the same problem every one of us does, and that is they're chasing for talent too, but they're going to chase for talent that is capable of understanding this against the investment banks, against established insurance players who can all maybe pay more than the regulator will pay. And so then they're going to be trying to solve this very important challenge in a handicapped situation where they're not able to necessarily attract the best that they would want to have so that they can do the best job possible. It's a very complicated issue.
Okay. We do have a question from the app, but the idea of you have legacy systems, and many companies are dealing with the issue of their legacy systems, and that has a major impact on data. I mean, just making sure your data is in the right way to really utilize and be innovative. What's the bigger challenge? Is it the getting over the legacy systems and getting your data in the right spot, or implementing new technology that can really move things forward? Now, Rob, I don't think you have any of the other issues, but I don't know. Alan, do you want to look at that from that
Yeah,
perspective?
when I
What
saw
do you
this
think?
question pop up, I was like, the biggest challenge is cost, right? Like it's not. I think it's really getting people that are at the forefront of understanding like structuring and how this is going to go. Because if you get people that have always done things a certain way, like, I don't know, like Tupperware, right? Like I have a drawer full of lids and no Tupperware, right? Because I did not think ahead at structuring my Tupperware drawer. And the problem is if you don't think ahead on your legacy, like it's always gonna be legacy, right? It's legacy tomorrow, today, right? Today is like the freshest your system is, and then tomorrow it's something else. And so it's having enough forefront, an idea, and this is breaking out the silos of like, if you only think of a product, like if you only think of property data, that's all it's ever gonna be good for. But it's bringing people in and having enough cross thought and enough groups that come together to start to think about how should we actually store this? What should we actually do with it? Like in having a forethought of like it's actually only property data today, but if we store it in the right way and make it accessible and put it out there, it's something way more valuable tomorrow, right? Tomorrow it ends up being like, hey, that we can actually figure out investment strategies, or hey, we can actually figure out like we have problems in, I'm gonna pick on Miami since we're here, right? Population density, rising tide water, all these things. But if we actually then pull data out that we thought would only be good for this one thing and start to open it up and realize we could use it to measure population movement and to incentivize people out. It really is like, you just got to not think about it as, hey, this is a lag of data, it's on our balance sheet, it's hiding in the closet, but what else can we do with it? And bring people in to start to figure out like what the other uses are. Then it becomes way more valuable and pays for itself to transition.
Claudia, Google's known for data and working through data. I mean, you've worked in the insurance industry. You've seen both sides. Do you see the idea of the legacy systems being a real issue for the insurance industry to be able to move forward? And we have another question, kind of ties to that. Is the insurance industry behind other industries? Well, I think everybody thinks that, but can we get past it with other?
I actually think we cut ourselves a bit short there. Because a lot of the key questions when adopting AI methodologies, we are used to dealing with them already. So no one in this room will be surprised that data quality is important. No one will be surprised that you need to think about data. What are the ethical questions about the data that you're using for your customers? How are you underwriting? A model is only as good as the methodology, and it's only as good as the data that you put in. So I think from this perspective, the insurance industry is really ahead of other industries in thinking about the use of models and how do you use models. How do you make sure that models are explainable, that you understand the conclusions that come out? How do you test them? How do you validate that these models actually give you reliable results?
Rob, any thoughts in terms of legacy systems, but also where the insurance industry falls relative to?
So the first thing I'll say is the reason I left AIG is legacy systems. I loved the people, but holy crap, you're trying to innovate at the same time as you're trying to run a 100-year-old company with 100-year-old infrastructure. It's super challenging, and so to all of the incumbents, bless you, I have huge appreciation for the complexity of the puzzle that they're trying to solve. And it's actually why I believe, think about math. What did you learn when you were educated in math? They told you to solve the problem, you would break it into smaller problems. So to me, I've kind of voted with my feet and said, I can only solve one of those two problems. Solving legacy and building new at the same time was too complicated for me. For me, at least, it was. I can build the new, and then I can work with people who have legacy and allow you to just plug into the new until you are ready to build your own new. In the meantime, I can help you get to that place faster. I think it also gets to sometimes why the industry can be viewed as being behind. I mean, two things are true. One is it's an industry that is focused on managing risk. So almost by definition, the concept of being risk averse and saying, I want to move faster toward the risk can be its own challenge for many. But the truth is, I think that the industry does a really good job as a whole of doing this. It's just that they're hampered by the fact that they've got to run an existing huge book of business and responsibility at the same time as they're trying to get ready for the new. And so you have to break it into its two pieces to really, I think, appreciate the complexity of the issue and also maybe to solve the issue.
Yasir, any thoughts in terms of legacy systems and its impact on the view of the industry?
I think this is, again, as a reinsurer, this is an endemic part of the business of reinsurers. We all have prospective business and we all have legacy. I think it is important to find solutions. Lloyd's had this issue. They created Equitas to take care of the past and concentrate on the future. There are active providers of legacy issues. For example, Instar comes to mind, where you have this, be it old portfolios that are becoming an obstacle for companies to go ahead. We have to find solutions for this, and I don't think we should shy away But the common mistake, and I've been in boards, number of companies, yes, adapting a new technology may seem to be easier, but it is costly. And normally what you have there is a scope creep. You have additional requirements that just comes in and comes in and comes in. And at the end, you don't see light at the end of the tunnel. Whereas if you take sometimes a more judicial approach to try to see what you have, and maybe it can be fixed. But it is important to find out when is the time to quit, because if you just want to expend more and more effort, it is useless. But I go say, very important that this issue and these risks, and we are in the risk business, as has been said, we have to find ways and means to address these issues. And there are markets, there are specialist markets for this legacy, I would say, issues, be it systems or be it the products.
Yeah. We only have a few more minutes. I don't know if is there any questions? Go ahead.
Oh, we have a question.
Oh, do? Okay, here, go ahead.
I have a preamble and then a question. Why did it take the Lord only 6 days to create the universe? And the answer is he didn't have an installed base. Technology people laugh at that, so I guess we have a few technology people here. I put this to the panel, and I appreciate Yasser's comment just now. Because of these legacy systems, it really needs, I think, how do you approach this? I know how Rob did, by providing a tool that can fit embedded into the existing infrastructure. So is the rest of the panel taking this route, or what other route would you take in dealing with these legacy systems?
Anybody want to, thoughts on?
I mean, we have a tool. So all of our products talk different languages, right? So surety talks bonds, treaty talks, in their policies, and we have every single product has its own. Our A&H practice has cases, and we have a data tool in between the layer. And what it does is it takes all the different parts of it and puts in a common language. So at the leadership level, when we talk about policies, we're talking about cases, we're talking about bonds, and it's a third-party provider, but it all comes in. And what it lets us do is it takes our data, it structures in a way that we can make informed decisions, we can look at it, but we can talk about it completely in a common language. And then what's really cool is all of our data within Swiss Re can be built onto other platforms. So we have feeder systems that go into it, then we have the data architecture, then from there we have subscribing systems. So for customer data management, for example, we have the financial systems in the middle, and then from it we've built a CRM system where we can receive in, and then we can adjust and do different things to it. So we can forecast for the year, we can build different, so we do use the technology where we're able to take that, talk in a common language, and then on top of it, build other things on it that go back and forth.
I think you have to find, as I said, innovative solutions. For example, my own company, we have U.S. asbestos risks going back to 1980. They're still in the books. We can't get rid of them. We cannot reinsure them. We just have to sit there until the liabilities effectively expire. We have parts of business that was written from sanctioned territories in the past. This again, the regulator is crippling your hand. You cannot handle it. You have parts of business where it is not worthwhile to continue. So we have brokers that no longer exist. We have companies that no longer exist. But there is a liability in your systems, IT systems, that you are liable. There is a premium due. So what do you do there? You have to find solutions for this. Sometimes, writing off liabilities may seem to be the easiest solution, but you have to be really careful because that is not ultimately in your policyholders' interests.
All right. Well, looks like based on the clock in front of me, we are out of time. But one thing I would put out, Rob made the point about, is solution, are you creating the solution or are you solving a problem? And, I think sometimes with innovation, people look so much as innovation and what we're doing that you come back to what is it needed? What are you solving? What are you addressing with that innovation? And how is that helping you better serve your customers through better products, better delivery, and whatnot? So I just kind of leave that out there. I don't know if anybody disagrees with that, but Claudia,
No, I
go
would
ahead.
also like to add that maybe let's raise the ambition. I think we've heard today many people are concerned about insurability. There's climate change coming. We have large groups of people who are already uninsurable. I think we owe it to society to keep innovating and to make sure that we can keep people insurable. So we are very well positioned, I think, to use the predictive value of our models to be more forward-looking and to invest more in prevention of loss. So I would like to ask everyone, let's raise our ambition here.
There's certainly room for innovation out there. There's no question. I don't think anybody in the room would disagree with that statement. So, all right, please, round of applause for our panelists, and great job. Thank you.